Let's bring in Robert Moran on the China-U.S. trade tensions. He's a partner at the Brunswick Group, a public opinion and market research company. First, I just want to get your reaction to what you're seeing right now. These trade talks have just gotten underway. What are you going to be watching for in the next few hours?
It's never a dull moment in Washington these days. I think most people expect us to eventually come to some kind of a deal. It's in both parties' rational best interests, I think. But this could be a long and winding road, and we'll have to see how it goes. I think a number of observers already expected some kind of a deal, but this seems to be going on a little longer than most observers expected.
That tweet from Trump on Sunday threatening up in tariffs really caught some people off guard. Now, some folks from various U.S. industries were speaking out today ahead of these talks that were taking place. Very concerned. Some folks from agriculture, the National Retail Federation, and I just want to give you one number that they pointed out. The average American family of four will have to spend almost $800 more a year if these 25% tariffs go into effect tonight at midnight. And then we could see close to 1 million job losses nationwide. What are you hearing from folks around here?
Well, it's a complex picture. I think for some sectors, like retails especially, this is a big challenge, right?
And farming, too.
And farming and agriculture. And if you get tit-for-tat tariffs, what does that end up doing, say, to soybean producers who appear to be shifting to corn? There's a lot of data on that. On the other hand, the negotiation appears to have started to disintegrate over IP protections, which is very 21st century trade policy, because we're talking about a world in which you design once and print many times with designs and 3D printing. And so I think a lot of the negotiations are actually about these things, but you have the externalities in all of the other sectors. I think both sides have a number of pressure points, and this ultimately is the problem in any kind of a managed trade environment where you're negotiating is you have plenty of potential losers. And this is why I think other advisors in Washington had been warning against the idea of a trade war, because you don't know where it's going to lead. It can start to just spin out of control, and I think that's been the concern all along.
Well, we got about a minute left, but it seems like you have the political class here in Washington making these decisions, and then you have everyone else running the companies, running the industries who are completely against what's been happening with the trade war. It's something that they don't want. So that being said, do you see, regardless of what happens at midnight, both sides staying at the table and talking through this?
I think you eventually get to a deal. I think the president would prefer a deal before he really kicks into re-election mode heavily. I think it's in his best interest. With that said, the president also likes having a political foil. And so if that foil ends up being China, and Chinese trade, which is pretty unpopular with his own base of supporters in key states, then maybe he takes the foil. I think, though, he would want to get this behind him and get a win going into his reelection. It would also help him, I think, economically. You saw what the markets did when the deal fell through. The markets hit a rough patch, and I think if he got a deal, then the markets would respond positively. So I think ultimately he would want a deal, but we will see.
All right, clock is ticking. Robert Moran, thank you so much for joining us.
Thank you.